Hello, hello. We are live. Yes. Good morning, ladies and gentlemen. It's the morning where I am joining you from. My time zone is GMT+2. Hope you guys are excited for today's live trading section. For those who don't know me, I'm Maxwell Zamini and I'm otherwise known as Max Capital. I'm the founder and the market analyst at Wall Street Institute and Company. Um, as always, interesting times, interesting day, interesting movements in the market. So we are anticipating some really nice movements today, but we want to make it a culture for these live sessions to always start with looking at the fundamentals, our calendar, potential news that might come out at particular times of the day, and we look at the specific pairs that they may affect, and then we jump on to our technical analysis. So what you can also do is leave a comment in the comment section if you want maybe a specific pair analyzed for you, or you want to ask a question. It might be a technical question, it might be um, on risk management, it might be on psychology, whatever, journaling, etc., etc. I'm not the, should I say, a guru in this market, but I believe that I've had enough experience over the past 7 years to be able to answer your questions. And I've traded a lot of strategies before I focused on supply and demand. So do not be afraid whether you're trading trend lines, whether you're using indicators, just shoot me a question. And if you want to register a trading account with probably the best broker that has been available for the longest time possible since 2009, that is TopFX. There are links in the description. So go into the description, you'll find the link right there. Click on the link on TopFX. My Instagram, Facebook, Telegram page for private mentorship is available there. I've also left a direct line to my WhatsApp number. You can leave me a message. Let us chat. Let's talk about the markets. I'm here to basically enjoy my time and share as much value as possible with people who are hungry, with people who are determined to make a difference in their lives using the forex market as a vehicle. So yeah, that's it. Introduction was probably too long. So yeah, we're gonna jump straight to trading economics is my favorite news outlet for fundamentals, which is where we look at how the markets are doing, potential direction, etc., etc. So um, our headlines is on German factory orders down. So news from German factory orders in Germany rose by 6.4% month over month in May, exceeding the market estimates of 1.2 following an upward rise of 0.2% in April. This was the largest increase in industrial orders since June 2020. So after lockdown, people are getting ready to be on the roads. We know Germany is one of the leading automobile manufacturers in the world. So I believe most of those orders are coming from the automobile industry. European shares fall on Fed hawkish stance. The DAX did drop by 0.7%. I was watching it yesterday. The UK 10-year bond yield surges to a 15-year high. It'll be interesting to see how that affects the markets. But I did see The pound increasing in value yesterday. I also saw a significant drop on DAX or the German 30. Eurozone construction falls. And overall, if we look at this news, we are seeing a decline in the European markets. So I'll be expecting the euro to be bearish as of today in response to yesterday's news, pricing those news impact. Malaysia keeps rates steady. So that's from Asia. Australian 10-year yield jumps to 8-month high. This morning I just closed the USD JPY trade. In relation to those Asian news, I saw a lot of uh, in the Asian markets declining, especially the yen, the Japanese yen. Japanese yen lost a lot of value. Yeah, a lot of value yesterday and probably today as well. So we will see on the chart how the market moves. And then from yesterday, Fed likely to raise rates further this year. So probably towards September or October, towards the end of the year. And these are news coming from yesterday's FOMC. All right. Let's look at Forex Factory to see if there are any high impact news that might affect our trading today. This being the London session, we'll be focusing purely on the European markets because that's where the liquidity is currently, that's where the volumes are, and that's the active market at the current moment. So we won't be looking much deeper into the Asian market. We won't be looking much deeper into the US market because those economies are not active at the current moment. It is night time. All right. Today being a Thursday, already we had the trade balance from Australia, which came out positive. So we have the oil and petroleum industries meetings today. So you expect oil and the Canadian dollar to be moving aggressively today. We also have from the US ADP non-farm payroll change, unemployment claims, ISM on the PMI services. Um, yeah, job openings, possible job openings for the month of July going forward. They're expected to decrease as last month's number was, or the previous number rather was 10 million, and now it's expected to drop to 9.93 million. ISM, which is Purchase Management Index, the previous value was 50.3 and the next value is 50.1. What's nice about this, you can also just click here to see what this news is specifically about. Like it's the level of diffusion index based on surveyed purchasing managers excluding the manufacturing industry. So what's the effect of the actual number when it comes out is that if the actual is greater than the forecast, then it's good for the currency. So if the actual comes in maybe somewhere at 51.5 or even 52, then we're going to see the US dollar, as seen here, the US dollar increasing very, but those are news that are coming in later on in the US session. Right now, as far as the London session is concerned, we are only gonna be affected by the OPEC meetings because it's gonna take all day. Right now, let's jump onto the chart. I have a chart on uh, Euro AUD, the euro versus the Aussie. As seen on the news, you can tell that we have some bearish sentiments on the euro Aussie. Let me do this so that we look at the right pairs for this session, right? So I'm gonna take the DXY. I'm gonna take gold. Gold. We need to have to look at oil because there's news happening in oil. Pound dollar, pound yen, the euro pairs as well. What else? What else? What else? What else? What else? What else do we have here? And maybe add the DAX, and then yeah, let me remove the others. Okay. So this is the beauty of having your trading view or knowing how to even navigate your trading view. It's the beauty of it all. All right, so we have the dollar index right there, and right there we go. Comments, people, questions. Yeah, I'd like to know what you think. I'd like to know what you'd love to know. I would like to answer to your questions as well. So, right, I always like to look at the market from a higher time frame perspective, that being 4 hour. So yeah, dollar index has been bullish. Overall, the order flow is to the upside, meaning the market is bullish. However, um, we encountered uh, this area of supply here. I think it was last week, 103,500, and the market reacted nicely to it with an aggressive push to the downside. We changed character somewhere here, and then now we're anticipating the market to come back to the order block that was responsible for the change of character, which is this one here around 103,400. And again, we had an aggressive reaction to the downside. So now I think the market is just pushing to collect liquidity and rebalance price, because there was some imbalance right after this order block. So that's a supply level right there. So going forward on the day, what are we anticipating on the dollar index? Personally, this is my view. I'm expecting it to decline or move further to the downside. Um, what's the next pair? US dollar, sorry, pound dollar. This one is kind of tricky, because if you consider the correlation with the dollar index, being expected to push to the downside, you'd expect pound dollar to push further to the upside. However, I think from this area we're seeing some bullish order flow. Um, Probably coming to take up these highs or these areas of liquidity up here, but we'll see. Currently what I had was a reaction to this order block, not the kind of reaction that I always like to see. However, we appreciate this. For me to commit to sell this, I would have to see a break of 1.26840, which is the last higher low that was formed on this minor bullish order flow. So yeah, on to the next. I think that was pound yen. Wait, I think we have a repeat of the pound dollar. What happened? Oh, this is gold. Yeah, I'm sorry. It really looks similar. These are positively correlated pairs. With gold, I'm not quite sure what's gonna happen now. There's lots of liquidity left here above the areas of 1937. And an unmitigated area of supply there. Let's change the colors for it to represent supply. An unmitigated area of supply up here with some imbalance, obviously, after the order block. So liquidity plus imbalance, we still expected the market to push to the upside. However, the question would be, can't we take advantage of the bullish order flow? That's going to happen probably here after this change of character. Change of character means the end of a trend, right? So we had this last lower high here, which was broken clearly to the upside. So we consider that as change of character, and we have imbalance left here and an order block below that. So this is the 15-minute one, the transparent rectangular one. So there's a possibility that the market might tap into this area and then push further to the upside. There's also a possibility that the market might start up there and push to the downside. Let's look at that from a 1 hour time frame. Right, there we go. So we have that clean. Look at that, the clean order block there. We have some imbalance. We have an order block here as well, but there's also a hidden one. Now, if you're an experienced trader, you know what I'm talking about. Experienced in spotting supply and demand zones. So we have a hidden one out there. But the look of things right now, you may never know, which is why I do not predict the direction of price. Rather, I set my points of interest, and then when the market gives me the right conditions, I execute at that particular thing. Because here's was the thing: earlier on in my journey, I was always biased, if I believe that gold is pushing up, even if I was in losing selling position, losing buying positions, I wouldn't even cut them because of the bias that I had. And I realized later on in my journey that the market needs you really um, to be neutral, right? So to speak. Empty your mind, as Bruce Lee once said. Empty your mind. Just uh, as much as we follow a proactive approach, in the sense that we always try to what's the right word? We always prepare to see if the market gets to this place. This is the scenario that I'm expecting. This is the kind of execution that I'm going to perform based on your training plan, of course. Um, we do not predict the direction of the market, right? Because we are not in control. One thing that my mentor once said, Mike Pellifer, you cannot be in every room where the big decisions are being made. It is impossible, right? So what you can do is rather have your levels and see how market reacts to that. And sometimes, by the time news events come out or an actual number of a certain macroeconomic item comes out, you find that the market has long had um, sort of factored that kind of price into the market. So you'd come in 8 a.m. in the morning for news that were released the previous night at probably 7 p.m. The market has already factored that price in. So yeah, as much as we focus on fundamentals are the ones that move the market. Uh, Plus our order flow in the market, but really the bigger influence comes from the macroeconomic picture. So that's what we always do. So yeah, gold, maybe I moved on too quickly. Gold, it's hard for me to tell. So two scenarios that we're anticipating, and probably it would be nice to trade this during the US session. As for now, this is what it looks like. It looks like the market will come tap into the demand level before pushing further to the upside. And if the market doesn't do that, so we'd anticipate a move to that area of supply over there and the push further down to the areas of 1905. Right, moving on to the next one. And also do leave a comment if you believe in some way you are getting any kind of value from these videos. Um, Aussie dollar. Aussie dollar, the Australian dollar. So what I had, I think let me go on a 4 hour once again so that I can give you the macro picture of this. So we are bearish on this, as you can see. We have impulsive bearish legs and consolidating bullish order flow, so to speak. So what I have been anticipating is the market to come back to this order block after it pushed down, change character here. There's also a 1 hour change of character, much closer to the order block. So we're anticipating